Welcome back to the Krown Crypto channel. Wishing you a happy and healthy start to this nice little Sunday morning over here from Helsinki, Finland. Got my nice morning walk in and some morning coffee and eggs, so I'm feeling good. And we're going to need that today because today is Sunday, obviously, so we're going to be talking about very long-term time frame analysis. I'll probably have like a clickbait bullshit title for this video, something along the lines of where I'm buying Bitcoin and why, or something like that. And of course, we'll actually be going over that. We'll go over a little bit of short-term time frame analysis as well. But again, today's focus is on the very long-term, constructing the long-term macro case for Bitcoin, of which there are several new compelling things to be discussing today in comparison to last week. So I want to always, be following up on these. And with that in mind, I want to wish you the best. And of course, oh yeah, one last thing. I want to give a massive shout out to the guy who stopped me at S Market the other day on Friday and say, hey man, I wish I could have actually stopped and said hello for a second there. I was actually on the phone at the time, but any other time, just hit me up and I'm more than happy to meet. I'm it's all good, man. It's all good. All right, cool. So is there anything else that I want to get into? Herp derp, oh yeah, that's right. Because this is one of those videos where I actually do kind of want to get out. If you find this valuable, if you find it compelling or useful, maybe consider hitting the like button. Only if you do feel that way. Obviously, not don't want to force anyone to do anything that they don't actually want to do here, of course. But hey, it's one of those videos, and also the old Bybit herp derp shill link right there too, for those people who are compelled. Anyways, won't get into that right now. Let's get into Bitcoin first on the short-term timeframes right here. And of course, we still do have a bearish setup, so we got a little bit of a short-term move to the upside to the area that we were looking at yesterday, right around the 55 on the 4-hour time frame. And what do you know, it's still just lower high, and we actually do have some hidden bearish evidence forming right here, which will confirm with a confirmation of a lower high right here, which will be had with any sort of a closure on a 4-hour below 47,200, very likely initiating at minimum another test back down to the bottom side of the range at 46 to 46,500ish region. And then you got to hold your breath again, because technically speaking, this is still a bearish setup here. As long as Bitcoin has lower highs, there's not really any real reason to be looking for major reversals right here. Yes, there are several signals that I think suggest that we could very easily see something like that. But at the end of the day, the way to kind of judge this, or at least in my opinion, trade it, is more or less the same. And as long as Bitcoin is below, especially the last lower high at 49,350, well, there's no talks of a short-term reversal, short-term bear trap. And now, seeing as we do have a little bit of a lower high being presented right here, we could actually even move that point down. So I'll actually keep it a little bit higher than that, just to give it a bit of breathing room, just because I do think it's better to err on the side of caution within this region. But basically this area right here, as long as Bitcoin's, let's say, below about 48,500ish region, especially on a 4-hour deal to closing basis, I'm not looking for any major bear traps or reversals, although I do think that there are several compelling things to be looking at right now that could suggest that. And with that in mind, we do have a descending triangle forming right here. Now, there's a great counterpoint to this that I'm going to talk about soon enough, but on spot price action specifically, which I do not trust over CME, just as a caveat, we would have that. And there is, of course, a implied target based off of the breakage of it below, your bottom side resolution here, which is pointed down towards pretty much our current lows, which would be another fill of that 4th of December wick right here, which actually does have a high statistical chance of happening, at least from my back testing, which would be somewhere down around about $43,000, give or take, from that number. That would also be confluent with the weekly 55 exponential average right here as well, where Bitcoin on CME has actually not hit just yet. So is there still a threat of a move like that happening? Yeah, absolutely. But at the end of the day, I want to be focusing this video on the very long term, and which we'll get into in just a second. But again, if you're on the short term timeframes right here, basically Bitcoin above 49,350, starting to look a lot better. Obviously, if you want a little bit more of a shorter term thing, 48.5 is probably fine as well. I do think that would be okay to be aggressive within this current region right here. But ultimately, that is going to be superseded by everything else that we talk about in just a second here. And before we get into that, I want to once again speak about the relevancy of the last weekly high or low at that 41,000-ish region on a weekly closing basis. As long as Bitcoin is above there, I do look at this as still a macro bullish market, because we still have a weekly uptrend. I mean, quite literally, we still have higher highs and higher lows on a weekly. We don't even have a lower low or lower high just yet. So if Bitcoin were to come back down below this $41,000 region and settle there and then pop back up, I'd just be looking for lower highs after that. And that's probably where I would be looking for, major long-term shorts in that case. Until then, Bitcoin, well, probably going to do a little more sideways right here, as we've been discussing. But ultimately, that is the big bias buster. And really what I want to hammer in before we move forwards, below that region, Bitcoin extremely likely to move down to at minimum the mid 30s, and probably even all the way back down to low $30,000 territory if that level is lost on a weekly closing basis. Until then, I still think that hopium is alive and in the air, and it's great. But that would be like the big bias buster, and where I really do start to get long-term term quite bearish on this. Okay, cool. So let's go over the short-term bullish case here as well. It's actually not on this chart. It's going to be on, of course, CME chart. So like I alluded to earlier, CME and spot obviously have slightly different charts right here, seeing as CME is not trading over the weekend. And if in doubt, I do default to CME. I've back tested all the signals there, especially on the the medium and higher term timeframes. They have a much higher efficacy if they are present on CME and not on spot. So whenever in doubt, I always go with CME. And what do we have right here? We do have a bit of a falling channel right here, which are statistically more likely to break out to the upside than the downside. Again, it is a game of statistics and probability, so just a higher probability to break out to the upside. But in this case, you do have that in motion for you. Now, here is a caveat in comparison to spot price action. Your last lower high on this one is a 49,300-ish number, not the 48,500-ish region, of which I imagine that's going to be just actually in line with this ascending trend line right here. So ultimately, it's probably better and more wise to be waiting for the 49,300-ish region right here. At that point, if Bitcoin does especially close even a full hour above there, I do look for this asset to trade back up, rather aggressively towards 54 to 55,000 bucks, and we're probably going to see some more upside from there over time after a bit of a pullback in the interim. So and also we do have bullish divergence building up, basically I think all the way up to a daily actually on here. Yeah, on CME right here you can see that we aren't necessarily making lower lows on the RSI oscillator just yet. We are, however, making lower lows on the daily closing basis. So that is of interest right here too. Okay, let's move on into the last portion, of which this is actually the funniest thing. I have everything overlaid on my charts over here, and I forgot to overlay this. So we'll just bring this one up really, really quickly here. And I want to talk about the again, another sort of thing within the short-term bullish case over here. We've spoken about this many a time, and that is, of course, our daily stochastic momentum on CME again specifically. So I've outlined all of the same iterations of these signals on the daily CME stochastic, where we do come down to this green bar right here, the green horizontal bar. These are represented by the blue vertical bars, and you can see that even within the context of very, very long-term macro downtrends, which we do not have right now. We have a daily downtrend, we do not have a weekly downtrend, and weekly downtrend does essentially denote a macro downtrend, at least in my book, for Bitcoin specifically. We do see some pretty phenomenal bounces based off that. I mean, this one over here, given about 50 to 60%, and even the most, and even like the worst iteration of this did grant about a 26.5% move to the upside, which is, amazing. Actually, it's actually quite amazing. But that's not necessarily what we're doing right now, in fact. And there's a couple iterations here that stand out amongst the other ones. That is going to be this one right here in the red, and this one right here in the red. First and foremost, as far as technical formations go, they're all in ascending triangles. This one right here, obviously, that's your macro cycle low at 3,100 thus far. Then your flu dump low over here. Same thing, an ascending triangle. And then what do you know? If Bitcoin essentially just doesn't lose the last $40,000 low on a weekly closing basis, well, we have one mega massive ascending triangle that's been being built for, going on like 8 to 9 months now, I believe. So these signals are also very similar to each other in the way that they interact with the green horizontal bar right here. So put this in your mind's eye for the time being. And I'm going to go back to the last iteration again. This is going to be March 2020. This one not as similar as the one that we're going to go over soon enough, but still of interest here. So you see this first move down, bounces, okay, reject, back down again, and then off to the races. And I have that one highlighted by the blue vertical bar right here. And you can see that Bitcoin basically never looked back after that. I don't expect something exactly like that, but you can see the severity of it over time. I mean, that just, well, it's one hell of a trade if you can actually have the patience to hold on to it, which I certainly do not, but I do think it's of interest for the long term. And then of course, this one over here, very similar to what we're doing right now. You get first base, okay, reaction is rejected, second base rejection, third base, and off to the races. Again, this one even took like another month or two from that point where you got the full-on signal right here on the actual low. And of course, Bitcoin went from about 4,000 to 14,000 bucks over the next few months. Again, these take time. These take a long time. We're talking about very long-term analysis right here. And again, if we go and look at this area right now, you can see that the first test, just like the macro cycle lows, very similar signature right here. Rejection, okay, pops back down. Second one, rejection. Third one, well, we're gonna have a chance to actually cross that one up on open today, in fact, because remember, CME actually did fulfill this criteria coming into Friday closure, actually. How do we know that? Well, we already know Friday's closing price, which was 46,935. So that should officially cross back up upon open tonight, which is going to be at 5 p.m. Central Standard Time, I do believe, but feel free to correct me on that. It's been a long time since I've actually been in Chicago, and that's just what I remember, so I'm going off of memory right there. But more importantly with this, if we do see an open essentially today above 46,500, then that condition will be met, and we can look for that to, well, carry this one onwards and forwards here. Now, of course, there is still, all these signals can always be undone, especially if Bitcoin, opens below there or closes the next day below there as well. But for right now, the next piece of the puzzle, that would be it. The piece of the puzzle after that would be very compelling for really solidifying this as very likely another one of those fractal sort of lows that we have seen would be popping back above this little high right here on this. So something like that, boom, and then, well, all good. At least that's the way that I'd be looking at it to validate a signature like that. Until then, it's just a possibility, and we're gonna have to follow up on this one, which should be resolved, or we should have clarity on the situation. Obviously, another piece of the pie today, and then tomorrow, especially Monday. Okay, cool. So we've got through that. That's a short-term bull case right there. Now let's go over the long-term bull bottom case, which sounds like a homosexual reference, but it's not. It's actually very relevant for long-term hodlers perhaps. Anyways, let's go over here and let's not talk about this one. That's not what we're talking about. Let's go to this one. Yes, let me just make sure I'm on the right areas. Okay, beautiful. All right, so first and foremost, I want to first speak about, is it this chart? I have to recognize where I put them on. Okay, is it this one? Nope, also not that one. It's not on this one at all. It's on this chart over here. There we go. Okay, so let's go over to this one, and I want to talk about, just kind of like the historical value areas for Bitcoin. I've been speaking about this a lot recently in the sense that, we have a lot of bigger players in this game with institutional traders and institutional investors coming in. They think about things differently than your average degenerate who just kind of like once Bitcoin or once any asset goes up like 5%, like, oh shit, it's happening right now, man. The moon mission's going on and I'm holding this shit to fucking until I'm a billionaire. It's like he started with $1,000. I'm going to be a billionaire off of this. Like, all right, fair enough. Hey, it's a fair proposition. Definitely some people actually probably were made that if they got into Bitcoin like right off the bat, but in this case right here, we do see from a value perspective, Bitcoin has a history of playing out about 30% pullbacks, give or take over the course of, its history. I'm putting the focus right now on, of course, 2017, on that rally where we had several pullbacks along the way, 1, 2, 3, 4, 5, 6, 7, all of them on average around about 30%, maybe a little bit more if you want to get super granular with it, but same thing. Anyways, go to our current pullback right here. And thus far, it has been a 30% move from top to bottom, actually, like this. As you can see, something like that on a daily closing basis, which is relevant. Okay, cool. So let's take that one step further. Let's go over, is it here? Is it here? It's got to be on one of these damn charts. It's got to be on one of these damn charts. Maybe it's over here, perhaps. Yeah, it's over here. All right, so also kind of judging, about where I'm looking for on a macro low on Bitcoin, assuming that the long-term bullish case is still relevant. Well, we do see as far as this whole massive consolidation goes right here, which if Bitcoin does hold above, especially that $41,000 region on a weekly closing basis, will be, essentially just wedging itself into one massive ascending triangle. Well, our current low would be coming in right here at about the 618 Fibonacci retracement, a very common area. And this is for the macro, obviously, for the macro consolidation. So that does hold quite a fair bit of weight and pretty much getting exactly to the T our current low from 4th of December. Again, that does not mean that that low can't be retested. It certainly can. This case only really gets destroyed by one thing. Again, coming and closing below about 40,000 bucks. The question, remains like what happens in the interim between, that and assuming that Bitcoin gets back above that critical pivot at, let's just call it 49,350. I probably wouldn't feel too comfortable or compelled by 48,500 just because CME is gonna take the cake on that one, at least in my experience. All right, cool. So we've got that. We've got the historical retracements. We got the monthly fib retracement. Now let's talk about this one over here. Let's talk about, where is my chart? Okay, that's secondary. No, it's right here. Now let's talk about, or do I want to talk about this one? Yeah, let's talk about this one right here. All right, so also talking about sort of the areas that we're looking for that might be relevant, I want to bring up the Bitcoin logs curves chart right here, of which you can see a very obvious relationship over the whole history of Bitcoin. Basically, your macro lows are put in on a spike to the green zone right here, your macro highs are put into a spike in the red zone right here, and your macro consolidations in mid-cycle are typically within the yellow zone right here. Now, if we did go down to a daily, you would see that actually happen in 2011, but because we're on a weekly, it doesn't really get registered on that, as you can see. But specifically 2013 and 2017 right here. And as you can see in 2021, we are doing the exact same thing. And where's that bottom side of the yellow zone coming in around? Basically where we're at right now. Yeah, it doesn't mean that we can't, come a little bit below there, put some wicks below and bounce back up, but just no opens and closures below is kind of like a general guide. I want to put specific sort of insight onto this 2013 run over here and what we're doing over here. Now, I always kind of shudder away from the whole fractal thing, but I do think that this is just interesting in general. So I'm going to throw my drawing tools right here, and what I've done is I've taken a Fibonacci extension from the macro base precipitating the big bad breakout, and then you can see into the actual consolidation in the mid-cycle. We do play, or not we, Bitcoin does play very historically between the 1 spot 272 as a base right here, you can see right there, and your 1 spot 618 as a resist, or I wouldn't say resistance, but just the top side of that consolidation in this case. Breakout above there, and off to the races for, of course, your run into the red zone over time. And you'll also notice I have a 1 spot 414 in there. Why is that? Well, funnily enough, you do see right before this thing, which was wedging itself into an ascending triangle, by the way, which is of particular interest. I mean, Bitcoin just seemed to like those. But you do see right before it actually does take off to the upside, there's one just massive dump to the downside before that. Now, a couple things are interesting about this. First and foremost, it comes down to the 1 spot 414. Okay, that's interesting. On a percentage base, how much was that? About 30%. Well, we already know our current move down off the highs is about 30%, doesn't need to be exact, just needs to rhyme in this case. But I thought that was rather interesting right here. And then Bitcoin pops up and tops at around the 2 spot 272. Anyways, go over to our current consolidation right here. Again, coming off the macro base, ascending triangle, like same thing over here. Mid-cycle consolidation. It would appear for right now, we still do have an ascending triangle actually. Again, don't let these terms confuse you or scare you. It just means that buyers are getting more aggressive. I mean, that's all that is, quite intuitive actually. And then where's our mid-cycle jump coming into? Or right, presumably maybe even at the end. The 1 spot 414 is exactly where Bitcoin dumped to, actually once and twice right here. So very interesting. Again, it doesn't mean that Bitcoin can't come back down and stab it again. Just don't want to see any real closures below there. Otherwise, it's kind of hard not to see Bitcoin coming back down to like mid to low 30,000 again. So fair enough. All right, cool. So we've got through that. Let's now talk about this. Yeah. Okay. So we got that. Beautiful. All right, let's get off that now, and let's go over to the monthly over here. And I just want to talk about the relevancy of this as a consolidation first and foremost. So first and foremost, or I wouldn't say this is in any necessary particularly necessary order, but we do see what you would expect on a long-term consolidation. You see that the volume starting off with this whole structure right here is declining from left to right, and that's what you expect to see in a consolidation. Why? Because as the volume, what the volume signature is telling you is that as the consolidation moves onwards and forwards and matures, essentially people are getting shaken out of their positions or just leaving, and that is the purpose of a consolidation move. So you see something like this, right? And typically speaking, it's around about 75% to 70% of the apex where you do see an actual breakout from that. Statistically speaking, it's just a lot more likely. And where does that start to come in around? Basically like first or second week of January, maybe as late as early February. Anywhere around here basically is kind of where I'd say is relevant, somewhere around here. So we still got some time to fill out here. This is a weekly, so this is going to be moving out of molasses place, but it does align with this being, healthy first and foremost. We expect to see something like that on our higher lows. We also expect to see volatility declining into our higher lows. Well, that's exactly what we see right here on the weekly BBWP. And if we take this one step further to the monthly, you'll notice that we are coming down to volatility levels that have not been seen since when? Since the flu dump way back on over here in April 2020. And in fact, all low monthly volatility reads have been met with macro reversals to the upside. So I'm talking about this one right here. or obviously the flu dump in 2020. I'm talking about this one right here in December 2018 at the 3100 macro cycle low, and then this one right here, of which we do see in September 2015 before, that mega run from 200 to 20,000. And what do you know? We are coming into that region yet again. And again, we expect volatility to contract into a massive consolidation. And as long as Bitcoin has its higher lows, that is a bullish signal to me. Long term, again, not short term. Again, Bitcoin can come down to 41,000 bucks, and it scared the shit out of everyone. Probably shake a lot of people out of their positions as well, but it still technically be within the context of the macro direction. So I do think that that is relevant to be speaking about. So that is supporting the consolidation. All right, so we've spoken about all of that. Now I want to speak about the sort of order of effects here, because whilst we do have a potential reversal formation going on CME chart here again, which is not trading right now, won't open up until later today on Sunday. Let's say that Bitcoin does start to pop back above about 49,350. Well, after that, what's the next sort of relevant target? Realistically, it's going to be somewhere around about 40, sorry, not 40, but somewhere around 55,000 bucks, maybe even as high as $57,000. Somewhere around there is where I'd be looking for as a bit of a kill zone, if you will, for, your obvious pullback, something like this, or maybe not exactly like that, but you get my point. Somewhere around there, your last little consolidation. Now, how would that change around the greater picture? Well, if we go over here to the weekly, what is this going to start to look like? This is going to start to look like an actual low if it trades back above, especially the gap down that we had from 53 or 54. Well, that's interesting, because if this is going to be confirmed as a local low, then we could extrapolate that weekly will have hidden bullish evidence right here. So we're making lower lows on the RSI momentum oscillator, and we'd be presumably making higher lows on price action. So that would have a natural target back up to somewhere around about 60,000 bucks. And at that point, anywhere above 60,000 bucks on a daily closure, even 59 for that matter, which is our last actual lower high right here. Let me mark this off really quickly here. Here's your technical last lower high, about just above 59,000 bucks actually. There's your full-on reversal in all time frames that matter, and all higher and all time frames above a weekly have still remained in uptrends, obviously. So that would be rather compelling. Oh, I think I also forgot to talk about maybe a thing or two over here. What about the 2-day? I think the 2-day Stokes are starting to turn up as well. Yeah. Oh, by the way, the 2-day Stokes will turn up with any sort of a closure on the next one above 48,250. So that would obviously be encompassed by, again, that 49,350-ish region. So a lot of things are kind of pivoted around there. And you can see how the dominoes would very likely fall after that. And realistically, Bitcoin really hasn't had a legitimate bounce since initiating the downtrend, which we got really bearish on this channel below 63,500 a little bit more than a month ago now. So at some point, typically just get a pity bounce just by the nature of it. So can it get back above that region or not? If it does, you can start to see the future events potentially unfold. At least that's kind of what I'd be looking for. Okay, cool. So we've got all of that. I forgot to mention this one as well. So let's go back to our secondary chart. Where did I put you? It's got to be somewhere here. There it is. Now, I've also done a statistical analysis of basically, Bitcoin consolidations over the past year or so now. And what we found is, and I've presented this before, but what we found is that typically, when you're on your major reversals, that being your highs and your lows, they typically take about the same amount of time for consolidating that move, which makes sense intuitively. So, for example, on our last major macro, or I wouldn't say macro high, but last major high, I guess actually not even our last major high, but one of our major highs, for example, was of course March, April, May. That was about 60 days between those two before the inevitable massive girthy red dildo party. Same thing over here on the accumulation after that reversed it back up for, I guess, our new all-time high run actually. Took about 63 days, so close enough. On this little short-term reversal right here, this one took about 14 days distribution at the high. This one resolved on the other side by 10 to 11 days. Our most recent one was 28 days on the high, and I forgot to go over this iteration as well. This one right here, 11 days on the high right here, resolved by 11 days on the other side right here. Just about picture perfect on that one. Not that it needs to be, just needs to be around there. And on our current one going over here, 28 days. 28 days, or sorry, not the current one, but the one that we just had, 28 days was right here, obviously. And of course, if we were to add about, 4 weeks, basically 28 days off of where we're currently at, that would put us basically end of December, early January for putting in the low. Something like this, it could be, again, this could take some time. This could take some time. But here's the thing, and where I really want to speak about narrative for a second here. Okay, so what we just had on December 17th is we had what's called a triple witching. What is a triple witching? It's when stock, options, and futures all expire at the same time. I think it happens only like 4 times a year, basically on your quarterlies. But don't quote me on that. It might happen more than that, to be honest with you. But those are the really, really big ones. The quarterlies are the really, really big ones. Why? Because, and especially why this last one, but first the quarterlies. Why are the quarterlies big ones? Because that's when a lot of the big asset managers and portfolio managers are rebalancing. So they're going to be making humongous decisions. And typically what they do is, coming into those, is they sell their losers and they buy their winners, is what they typically do. However, around the end of the year, we have an even more complicated dynamic with people or with bigger institutionalized traders typically. First off, there's going to be tax harvesting purposes. So you're going to be taking profits or managing around positions in order to reduce your tax liability, presumably, which is legal, by the way. You can do that. I think anyone can do that, or anyone can do that, at least as far as I know. On top of that, not only can you do that, or not only is that a thing, but also the people who are working for institutionalized investing or trading, they want to lock in their bonuses before the end of the year to realize, or sorry, they want to lock in their P&Ls in order to realize their bonus, which is based off their P&L. So they'll typically pull it in home around the second week of December just to make sure they have what they want to count on. And then also this past Friday, the 17th, I believe it was, is basically the last trading day in the month for like anyone who works a professional job. Most people take off these next 2 weeks fully. They even take off a lot of the time like the first week of January. But next week is basically like a half week, because one day is a half day and the other day is a holiday, being Christmas, right? And then the week after that, you have New Year's, so that's another day off. People just, in my experience, when I was actually on the floor on NYSE Arca, basically people just didn't even come in like the next like 2 to 2.5 weeks or so. Everyone would just go on vacation and shit like that, which fair enough. I mean, you can kind of imagine that. Like most people do that, right? Even though the market technically is still trading. So what sort of a dynamic does that create? Well, with most of the, if not all of the professionals kind of out of the building, it's mostly retail traders who are trading during that time. And then also those institutional guys, they want to come into January fresh, so that they can start, with fresh P&L, whether it's good or bad before. It's like just makes it easier to kind of build it up from there. And then on top of that, there's one other thing that I just completely slipped my mind. Yes, that's it. Right. You're beginning flows. So like all of the big institutions investing and whatnot, they will, usually start to allocate at the beginning of the quarter. So that's when they start to make their big decisions that they were planning like for the year prior, because they move very, very slowly. So what's happening right now? Well, you do have a bit of a dynamic and perhaps a narrative play where retailers can front run those bigger and slower institutions, where they get in their positions first and, get to run the price action. And in this case, probably to the upside, because we do have several things suggesting that. The question is, do we play the downside move first to like 43 or 44 and then pop up, or does it just pop up from here by taking out that 49,350-ish region? I don't have a strong opinion on that, man. Either which way that happens is fucking fine, man. One last final fuck you to the $43,000 level would be classic. Doesn't need to happen, however. That's not a guaranteed, of course. Anyways. Okay, so we've got through that. Now let's actually go through Bitcoin's history, specifically Bitcoin's history on that December 17th date. Okay, well, or basically like the last Friday of the trading year date. Okay, well, here's one right here. That was December 17th, 2020. Oh, that's a nice girthy green dildo party starting from basically your breakout from 20,000 bucks all the way to 40 without any real pullbacks. That's rather interesting. I also marked a few quarterlies over here as well, because those actually do have some very interesting interplays, which we might go over in a second. But the other one precipitating that was December of 2019, before this almost 60% move, I think it was, from bottom to top. Yeah, 63% move right there. Now, we did have a bit of a black swan event after that, which, you could argue that maybe Bitcoin would have broken out from this region right here if we didn't have the flu dump, but that's neither here nor there. We have no way to confirm that really, without like a alternative universe time machine or some shit like that. Then the time before that, of course, the last trading day of 2018. What was that? That was your macro cycle low at 3,100 or so. I actually remember that one very vividly. or around there it was. Hey, what about the one before that? That was your macro cycle high, December 2017. And we can go through maybe one more over here. I think this one was your last major mega breakout, kind of similar to what we saw last year in 2020. And this one over here, like your last breakdown, of course. So I didn't go further than that, but just quarterlies in general do a lot of the time offer up major reversals. You know, basically for flows is kind of what it comes down to. So I did mark up a few other ones right here. You can see this one kind of marks the low of this consolidation. Same thing right there, low of the consolidation. There's your reversal on the flu. There's your reversal from your $4,000 to $14,000 rally onwards and so forth for the quarterlies. But we had a very special one just now. Also, I want to briefly go over this as well. Seeing as we are coming to the end of the year, it's time to be looking at the quarterly chart. And the quarterly chart, represented by each and every 3-month dildo, we do see a very interesting interplay here. The reason why I say that is because anytime that we've seen a reversal on the quarterly, it's not like it's taken at least more than one quarter in order to reverse it again. What do I mean by that? How do I explain that? I don't know how to explain that one without running my brain through, but basically we can just get through that point. It's not as important. I mean, I think we've kind of beat this horse to death anyways. And then last one, and this is the real one. This is the real analysis right now. What is the most important thing that is happening just as of last night? We got the moons, baby. We got a Bula moon coming in hot. Now, to be fair, the last Bula moon did not work too well. Nor did the one before. The one before that was okay. She did lead Bitcoin into its current all-time high. But other than that, I've actually back-tested all these for the past year, a little bit more than a year now, and they've had better than an 80% chance just blindly trading for, decent moves essentially. So I thought that was interesting. Cool. We are 31 minutes into this video. Maybe it's a little bit too long at this point, but I think I just diarrheaed all my words out there. Basically what it comes down to, hey, as long as we're below 49,350, can't really be bullish. Still have a threatening or a potential threatening move down to low $40,000 territory, but as long as Bitcoin's above $41,000 on a weekly closing basis, I still don't have any reason to be macro like bearish, for example. And even when it does, there's probably gonna be a rally after that, and I'd be more interested in shorting like the next lower high than that continuation drive, whatever. Okay, anyways, my point is that to kind of address the video title, where am I buying Bitcoin again? I bought Bitcoin for the first time with fiat since 2017, basically on December 4th in the mid 40s, and perhaps I'll buy a little bit more if it comes back down around there. Again, not because it's guaranteed to work out, it's destiny or anything like that. No, it's because it offers up a nice edge, and I like that probabilistic trade because I don't have to hold on to that for too long and potentially go through a lot of losses if I average out somewhere in the mid to low 40s before I know that my trade is not going to work too well by taking out the $41,000 to $40,000 region. So I think that's going to do it for right there. Again, if you do find, there's a couple other things as well. All right, let's go into the underlying market dynamics over here. Underlying market dynamics are a little bit more on the bullish side as well. Again, when we're in the fearful zone, done goofed on this one, but basically Bitcoin's been within the very fearful zone for about 3 weeks now. It looks like, a little bit over 3 weeks now, actually, of which that is longer than what we saw on the last major low week. We even got even more fearful than that $40,000 September low. And the only time that we've been even lower than that for this amount of time was, of course, on the summer lows, of which, once we really got in that region over here on May 19th, on the actual wick low, never went lower than that over time. So what does this tell us? It's telling us that, yes, it's probably still worth waiting for a little bit, but ultimately we're probably looking closer to a bottom than not. On top of that, if we go over to the first data tab, the other underlying market dynamics like financing on the global funding rate is, more in the bullish side. We've been downtrending ever since basically Bitcoin hit its highs in October, November, and we even got some negative rates right here, of which, right now this is an average. So anything below 0.01% is considered below parity, at least in my books. That is parity for this, and that does suggest that we got some trapped shorts, obviously. Open interest isn't too high as well, so this is kind of a basing point. You can almost visualize, if I remove my cam, a bit of a trend line from all of our major lows from May to September to where we're at right now. I don't know if that necessarily works, but I thought that was interesting. And and the market's over leveraged. So that would suggest that right now the over leveraged side is probably a little bit more in favor of shorts. So with all that in mind, the underlying market dynamics are a little bit more on on the bullish side, I guess, alongside the exchanges net flows over here, of which we've seen consistent net flows for like the last couple weeks, like some pretty big numbers there too. Last night we did see about 1.5 thousand Bitcoins flown into exchanges, but that's extremely minimal compared to like 20,000 outflows, right? All right, cool. I think I've spoken your head off by now. I hope that this was in some way helpful. And with that in mind, I want to wish you well, take care, and I'll see you in the next one.